Hey there, traders and friends, market participants and enthusiasts right around the world. Thanks a lot for joining me on this Thursday afternoon market recap. As I speak to you now, we still have approximately 50 minutes of the session left. However, overwhelmingly across the board, the markets have been overwhelmingly positive. You can see in the top right-hand corner of my screen, the Dow Jones Industrial Average is up 330 points as at this recording. Again, the S&P 500 very similar, up 24 points respectively, and the Nasdaq, probably the most bullish of the three markets, or at least the strongest, really leading the charge, so to speak, off from the support area, is up 72 points as I bring you this recording. What is really good to know is that we are not only holding support, but we are starting to push off from it. And given today's momentum, it's going to be a very interesting session as to how Friday is going to play out. The reason I say that is because as at the current juncture, and even as I look at the intraday charts right now, we are obviously coming back up into retesting this descending resistance area that has been problematic for the financial markets since we established the top. This is dating back to the fourth last trading session in the month of January. As you can see, since the waterfall sell-off, which is stabilized very early on in the month of February, we've had consecutive rallies back up into this, of course, declining resistance area, and we have failed to overcome it every single time. Now, again, rewinding a little bit and going back to our understanding a little of all of this chop and really how the analysis was informing us of what to expect moving forward, we've always assumed that we were going to come back down and ultimately produce that secondary retest of this macro support area. That is still true. The question becomes now, however, is this going to be the momentum push that takes us definitively above this declining resistance area? Or are we going to see another sell-off, which is going to take us back down into the support area, ultimately closer into the apex of this descending triangle, which is then going to set up, of course, that Bollinger Band squeeze? It really can happen in any of those two different scenarios. But for argument's sake right now, this has been a tremendously profitable period off from these support areas. So I don't blame you as at Thursday if you're choosing to take a little bit of that profit off the table. Personally, a little bit earlier for me, on those diamond positions alone that I've entered into 9 days ago, I closed out 40% of those positions for a profit and loss, I guess in percentage terms, just below 60%. I think it worked out to be 57, 58%. Right through to about 3 p.m. Eastern Standard Time. And that's just a very quick move off from the support up into this declining resistance area. So of course, it's always your own personal decision as to how you manage trades and open positions and how you want to structure, of course, your targets and stops. But I do think it is important as we move towards the end of the week that first of all, you recognize this declining resistance area. You also recognize the fact that we got very close to filling this open gap. Again, this is dating back to the candlestick, which produced itself on the 5th of April. We almost closed it. However, we were a couple of points shy of definitively closing the open window. So we can expect a little bit of resistance around this area. But again, most importantly, as long as we remain above this support area, it's all well and good to remain, or at least to hold on to those long-orientated positions. Whether or not you're choosing the diamonds or the SPYs or the Qs, they are all looking quite healthy. As that I sit here and bring you this recording. The same is true for the S&P 500. We are closing up, so to speak, very close to 25 points at the moment. You can see that we're back above this first trigger here at 2,657. If you manage to get in off from lower areas, that is tremendously profitable. Again, depending, of course, on the contract expiration and the strike price. These are already tremendously profitable trades. And above all else right now, I just want to congratulate you for, again, being patient and waiting for the right opportunity to enter the market with very low risk profiles, but with tremendously high reward profiles, which again, I assume is going to take us on up all the way back to close these open windows at a minimum. Okay, it's not going to happen most likely in the month of April. This is going to play out over a number of months, but as long as you understand that that magnet essentially is pulling the market higher, at least we need to finish the sentence before we can move forward. If this turns out to be some larger correction, so to speak, again, it's still a little bit unsure, but before we can actually crack critical areas of support and essentially move into that of a bear market, and again, I'm not advocating that whatsoever or championing that or even saying that I believe that's going to happen, but if it were to happen, we would have to see these open windows close, and as such, there's still a long way to go higher before we can essentially, turn the page, so to speak, of this current sentence and paragraph that's still under construction. All right, so I just wanted to make that very clear. Obviously, we've got some big movements also in gold and silver and also the US dollar. Before I get there, let's just recap a couple of these trades. There's a couple in particular I want to do, but Apple again is still basing. It still hasn't broken out yet, but it's still looking quite healthy. Amazon still's got a little bit further to close this gap. Not the biggest of movements in Amazon. It suffered a little bit of a correction, or at least a relatively large, so to speak, correction as to what we've seen in the past, but it is still healthy as per the structure of that individual stock. Boeing Airlines is still firming up above 331. So we've identified this support area over here. Now essentially we're playing the bounce. This is still strengthening. We're up about $9, so to speak, during today's session of trade. So this is looking quite good, all the way up to 356. I believe that stock's going to run to. We've got Baidu, which is still holding up above 330, not the biggest of movements. We do have a series of spinning top candles, but again, not too much to read into at this particular time. Caterpillar has been another one of my favorite trades. This has been mimicking that of the industrial average very closely for quite some time. 146 was our first entry. You can see today, or as at this recording anyway, we're already at 150.57. So this has already made, $4.50 almost of profit, so to speak. We are retesting that sideways moving 50 exponential, so that shouldn't be a problem. However, very similar to the Dow Jones Industrial Average, we still have this declining area of resistance that you need to pay attention to. So if you do see a little bit of selling on Caterpillar, say for instance tomorrow during Friday's session, I wouldn't be calling this a reversal, so to speak. It is, of course, just a retest of this declining resistance. And if this is to play out, again, no guarantees that it is. I'm expecting it to hold at 144, and that will give us another opportunity as, again, we enter or at least draw closer to the apex to see that Bollinger Band squeeze, and then ultimately the break, which will take us up to 170.56. So it's all good news with Caterpillar. That has been one of my favorite stocks, so to speak. At least the setup of that, along with Boeing Airlines, that's been another tremendously nice sort of structural trade that we've been following very closely along. We have had to wait a little bit for it, but this is where we begin to get paid off, so to speak, as technical traders, and of course being disciplined and following the charts, understanding when is the right time to enter, and then just following along with the trading plan moving forward. We've got CVX. I think I've actually just jumped over COP. COP is continuing to the upside. Personally, I will say that I am not in this. It's something that I spoke about over the weekend. It is sort of an outlier. We've got this breaking out where the markets are trying to stabilize at their respective support areas. So again, I'm assuming this is going to come back down to about $60 per share. And then that's where I'll be looking to sort of jump into it off that 1, 2, 3 bounce retest, and then, continuation of the breakout as to what we're seeing at the moment. So I think there is going to be another opportunity to jump into COP. I would not be chasing it at these current levels. It should be, or we should at least see that of a reversal sometime soon. And now's not the time to jump into potentially a whipsaw on COP if you're not already into it. We've got CVX. This is another fantastic trade. 113.54, 116.15, and the third entry, 118.50. We're trading at 119.52. So anyway you look at this, it is quite healthy. It is quite good. We are coming back up into this Fibonacci retracement box, but you have to understand the market is essentially a sale, pushing this or taking this higher. So as long as the markets, again, remain structurally sound, this can still move quite a distance, all the way up to 130.79. That's still my target on CVX. So pretty decent trade there. That's really only starting to get moving. We've got Google, very similar to Amazon. It hasn't broken out, very similar to Apple. But again, this is like a coil, so to speak. This is the NASDAQ with all of the volatility bubbling underneath the surface. As long as we remain above these support areas, really we're going to see some explosive moves, I believe, in the Qs, which potentially may have shifted this past week. So very important to understand structure of the market and how that applies to individual companies. We've got Goldman Sachs pretty much floating around 258.61. I'm not a big fan of Goldman Sachs. I've been very open and outspoken publicly about that, also privately in that analysis class, which I bring those traders on a Saturday. But I'm not all that fond really of Goldman Sachs at the current juncture. IBM pushing on up above 155.30. This is trading at 158.32. So a quick $3 here. Again, I believe this is the only the beginning of the move. I'm still looking at this at a minimum coming up to 162, but ultimately up to 165. That's my target on IBM. We've got Netflix again stabilizing off from this support. We had some nice candlesticks over here that we spoke about. The 50, which is held, and as I bring this up as well, something that I haven't spoken about in this recording is that you're seeing all of the oscillators, so to speak, flip bullish, including the MACD, which is good. And especially on Netflix, it's firming up above the zero line. So what you're seeing when it comes to the market indices is that the MACD is firming up below the zero line. This is technically a sign of weakness. It's not so much a buy-sell signal where you see the stochastics move into oversold conditions and then cross up. I mean, technically the lower the cross on, say for instance, the stochastics into oversold territory is a stronger buy signal, especially during that of a sideways market move. When I go back into Netflix, this is telling us that the trend itself is still healthy, it's still strong. And again, we're still making a series of higher lows and also higher highs as well. So I'm really enjoying, of course, a lot of these trades. I mean, it's really a really fantastic time to sort of be harvesting a lot of the patience that we've had to sit through, essentially been sitting on our hands, but now it all becomes worth it. This is, the best time really essentially of being a trader right now, where you can sit back and allow these stocks to move in the direction that we have been waiting for them to move, and to find confidence really in buying off really smart and intelligent locations on the price chart, which above all else is most important, okay, as a technical trader. We have Tesla as well. Tesla is something that I'm not looking really into doing much with. It's very similar to Goldman Sachs. It's something that you should stay clear of. It has been tremendously volatile, and long story short, there is no definitive sort of trade setup on this stock at the moment. I know the bracket looks good. I know that we're starting to develop both resistance and support, so to speak, but you're probably going to see a little bit of whipsaws and fake breakouts and breakdowns, so to speak, as we really develop this pivot between 310 and what appears to be 290 at the moment. Okay, so allow a little bit more leeway. I wouldn't be going or at least chasing any particular trade on that. Now, what's interesting also is that the US dollar today, it tried to strengthen. I mean, it did firm up a little bit. As at this recording, we're up 23 cents. And obviously, this is causing mayhem, so to speak, in the commodities markets. What you need to understand, again, the US dollar is stuck. It's moving sideways. I don't care how you break this down. I don't care if you want to try and call this some form of a symmetrical triangle. I would argue that it's not. I would just simply say that we are absolutely range bound. We're stuck, and the ranges themselves on the actual US dollar itself are pretty much untradeable. At least it doesn't really give us some great, profit targets, so to speak, even if you buy at support and if you're looking to sell at resistance. I mean, it's something that you should just stay clear of. And as we continue to sort of just remain in this ugly environment, you have to understand that gold and silver are both going to do the same thing. Now, look at the candlesticks that are developing on GLD. Yesterday, I was very surprised at this particular candlestick. I put out a video update yesterday, obviously, and spoke about, how this gap should fill. But what is interesting about this is not only did the gap fill, I mean, we overshot the gap, and really what we have is a 3-day reversal pattern. This is what we call an evening star reversal, a very, very bearish reversal signal. Now, again, I need to wait, of course, for the final volume print. This is not the final volume print. If volume, however, is still relative around this current area, it isn't all that strong of a sell signal. I mean, generally you get these suspension gaps. These are 24-hour gaps between the actual GLD ETF, or at least the spot price of gold anyway, and how that, or at least the change in price with the opening hours anyway of the markets themselves in the US. But what's most important, again, is that this is simply moving sideways. You can read into it. You can call this or label this an evening star reversal, which technically it is. But really the impetus for this trade is still the US dollar. And, I don't blame you if you're still not really doing all that much in it. Personally, I am not. My trigger is understanding, of course, the direction of the US dollar. Until that is definitively confirmed, just consider this volatility which is bubbling away, and ultimately we are going to take advantage of this volatility once it starts to erupt. The problem is that it doesn't really show any signs, so to speak, that it is imminent. I mean, potentially yesterday, yes. However, with the strength that flew into the US dollar index, and obviously the major reversal which has taken place, at least intraday yesterday being Wednesday, and then during today's session on Thursday, it looks as though any buyers are jumping in a little bit too early, even if potentially later on, say for instance in the month of May, even if we do see that bullish breakout, those buying now are still a little bit early. And especially if you're trading derivative contracts or option contracts, that theta value is going to eat into, of course, that partial pricing mechanism or structure of the actual option contract itself. So I would personally wait for the US dollar. I've been speaking about this for a very long time. It can be tremendously profitable. You have to understand how to trade it or when to trade it. And really the ignition, so to speak, or the green light is certainly the US dollar. The US dollar is still, just downright ugly, so to speak, even as at Thursday today. So that is a market update. I wish you all the best, everyone. If you have any questions, email me success@pivotpoint-trading.com. I wish you a very nice Thursday evening. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.